Welcome to Markets Now. I'm Michelle Rook along with Oliver Slow Blue Line Futures. And we had a sharply higher day over in the grain trade with some limit up moves over in the wheat market. Livestock futures trading mostly lower. And Oliver, let's start off with the big rally in the grains, pump and war and weather premium into those markets, weren't we?
Yeah, absolutely. A lot of green on the screen to start the week, and a lot of that came on the back of the wheat market trading up to limit, which is 60 cents. So we'll get expanded limits in the overnight and into tomorrow's session as Russia continues to attack these Ukrainian ports. But one thing that I'm keeping a close eye on is the volatility in the options market. And looking at the options, although wheat was limit up, we're able to see where wheat would be trading if it weren't limit up, and the options were pricing in just 3 to 5 cents higher when we were locked limit. So not a lot of fear and panic like we've seen previously, which I think is a little bit of a silver lining from a trading perspective. I don't like to see the massive panic that we've seen in the past, but a lot of this is going to hinge on if things continue to escalate overseas for wheat. For corn and soybeans, it's obviously going to be a lot different story. Weather is going to continue to be extremely important for corn and soybeans. Soybeans will probably take the lead on a weather market here going forward. But next month, once we get into August, you're going to start seeing these crop tours hit the road too. So you're going to get a better idea where these yields are coming in at throughout the corn belt. And that's going to have a big impact on price going forward.
In the wheat market, because like you say, we were limit up today, do farmers need to be worried about this headline, chasing all these headlines here by the traders?
Well, the headlines have been a revolving door for the better part of the last 3 years. And you and I were just talking about it off air, where one day it's weather, one day it's demand, and now it's the Black Sea. And it's just a continuation of volatility. And I wouldn't be surprised to see that stick around through the back half of the year. And when we're looking at volatility, the CME CVOL indexes, they measure volatility for each of the commodities prices. The corn CVOL is at 42.5. That's towards the upper end of the year's range. And the average true range for corn is 22 cents. I think the average true range for soybeans is 33 cents. So we're seeing a lot of opportunities for producers. And if you don't want to handle the risk managing a futures position with these swings that we're seeing, options, I think, are a great tool to help limit that downside risk. Because if the things do kind of calm down overseas in the Black Sea region, we do get some good weather, there is potential downside, and options are a great way to mitigate some of that risk.
Yeah, so you can sleep at night for sure. What about this corn market? Technically closing above the 100-day moving average once again. So now where do we target?
Well, we took out last week's high, and we're just pressing right up against the 200-day moving average, which everyone and their dog is keeping a close eye on. That comes in near 575. It's also a key retracement, as well as represents a lot of previously important price points going back to June. If the market's able to chew through that 575 level, perhaps that invites just more momentum to press us up towards $6. I think weather and what goes on in the Black Sea is going to be the ultimate deciding factor with that. And I think the funds are just kind of waiting in limbo for the time being. Friday's Commitment to Traders report showed managed money net short about 47,000 contracts, which is fairly neutral for them. Broken down, that's 145,000 longs and about 192,000 shorts. They're probably going to make a move one way or the other. But again, a lot of that is going to be very dependent, I think, on weather and what happens in the Black Sea.
Historically, are funds usually this short in the corn market at this juncture of the season?
It really depends on the year. I think when you're looking at this year specifically, I think it's important to note that there's big positions on both sides of the market. There's very smart people on both sides of the market, and right now it's just a wait and see game with regards to weather in the Black Sea. And the crop tours hitting the road in August are probably going to have big implications on prices going forward as well. The big thing that kind of keeps me from getting overly optimistic on the corn market is the fact that demand has been so lackluster throughout the year that I'm not sure these high prices are going to entice more demand going forward. Now, on the flip side, on soybeans, the high prices, well, yeah, that is a concern for demand as well. But we did get a nice flash sale this morning to China, 121,000 metric tons, or about 4.5 million bushels. So that's encouraging to see. It would be great if we could see more of that going forward to help support prices.
Yeah. Do you think that China's getting concerned right now about our weather situation in this country on
I,
soybeans?
I think a lot of people are concerned. I think if we had good subsoil moisture, there wouldn't be that concern. The 6 to 10 day forecast continues to show above normal temperatures, but there is some precipitation in there. If the precipitation really misses, you could really see this concern escalate and potentially, more demand come into the market for fear of higher prices.
No doubt. And so is it possible we're getting close to those contract highs? If we take those out, where do we go?
Yeah, 14 to 14.25 has been a brick wall of resistance going back to last September. We poked our head out above there today. If the bulls can continue this momentum, I think we could potentially go retest those highs. I think it comes in near 14.48. Above that, we're in uncharted territory, and I think it becomes more of a game of momentum. And right now, the way that the funds have been trading these grain markets, they've been riding with the momentum, and that has been higher for soybeans. So if we are able to get out above some of these technical levels, I think they've got room to add. Commitment to Traders report has them net long about 96,000 contracts, which is basically right smack dab in the middle of their year's net position. They've been as long as 131,000 contracts earlier in the year. So again, if we miss out on some of these rains and it continues to be hot and dry, I wouldn't be surprised to see them add here above some of these technical levels.
It hasn't just been soybeans, though. The products have been going higher here. The funds have been adding on to their position there, especially in soybean oil. What a comeback.
The oils have been on a tear. I don't follow the soybean oil as much as some of the other analysts in the office, but looking at the crude oil market, that's been on a tear.
Yeah.
And I think that's really encouraging for prices too. I think that probably the path of least resistance going forward is higher for a lot of these markets.
Yeah. One last question on grains. You mentioned weather, and obviously the yield debate continues to rage here on corn. That yield is going down. Is, your thought that we are starting to shrink this crop or have already?
Well, I think the majority of the folks out there think that we have a lower yield than what the USDA is projecting. So I think a lot of that probably is baked into the cake. How low do we go is the big question. And when you're talking about USDA lowering yield, they generally don't make any big swings month to month. So I wouldn't be surprised to see them walk it a little bit lower. But again, once these crop tours start hitting the road here, once we get into August, I think that's going to be a big key driver in price action going forward to give us real boots on the ground look at how these crops are looking.
Yeah, we have to have some pretty significant yield losses, though, to overcome the big ending stocks number that
Absolutely.
we're projecting. All right, cattle market reaction to the bearish cattle on feed report. Is that why we were down today, or we're seeing more profit taking, or what?
I think it was probably a combination. The bearish cattle on feed report, we had grain moving significantly higher today, and that obviously pressured feeders as well. But I think one of the things that makes me a little bit more concerned on the longer term picture is how aggressively long these funds are in the live cattle and feeder cattle markets. Net long live cattle, they're long about 115,000 contracts, which is definitely towards the upper end of their historic range. And broken down, that's 124,000 longs versus only about 9,000 short. So everybody's on the same side of the boat. And I get it. The fundamental backdrop is strong. Demand has been stout. Despite these historically high prices. But if that starts to stall out, which seasonally would kind of align with this time of year, it's a narrow exit door. And specifically for the feeder cattle market, they're long about 16,500 contracts, which is at the upper end of the range. Doesn't sound like a whole lot, but for feeder cattle, that's one of their largest net long positions in over 5 years. So again, if we start to get these fundamentals even just to stall out, I think that could potentially trigger some long liquidation.
And what would spook them to not defend that long position? Is it got to be a major black swan event or what?
I don't even think it would have to be a black swan event. I think it could be something as simple as the cash market starting to stall out or the cash market even starting to retreat. I think that could be enough for funds to say, listen, we've made a pretty good run here this year. Let's book our profits and look at some of these other markets that may be on the move. That is kind of what I'm looking at as the potential catalyst for long liquidation.
You bet. And with that in mind, what are you thinking about cash trade this week? Will we be able to continue to inch higher here or not?
I think we may be able to inch higher. I don't know that we're going to really accelerate this week, although we certainly could. But I would expect firm to slightly steady. I don't think the market's ready to fall over just yet. But again, that's kind of lingering in the back of my head, and maybe it's because I'm working as a risk manager with a lot of clients who are supposed to protect the downside. And again, as we mentioned in the grains segment, options are a great way to do that, protect the downside and keep that upside open.
Hog market has had a huge rally from the contract lows in May. How much more gas do we have in the tank? And especially in those back months where we're at such a discount with the futures to the index.
Yeah, we may be able to continue to grind higher over time. I think the market needs to relax and take its breath a little bit. As you'd mentioned, just a tremendous rally from those lows back in May. That October contract just right up against that 200-day moving average in the top end of the range from April. That comes in from about 85 to 86 and a half. That's going to be a big barrier for October. But looking at the deferreds, we're actually approaching a bearish seasonal for that December contract that actually started today, goes through August 6th. We've seen December futures trade lower 13 out of the last 15 years. So I wouldn't be surprised to see us consolidate and maybe pull back a little bit, but the buying opportunities are probably going to be on the back of those pullbacks.
All right. Thanks for joining us with your insight. That is Oliver Sloat Blue Line Futures with Markets Now.